Evening, everyone. It's 5:27 on Wednesday, the 28th of September, and this is your closing comment video number 1472. And the chart on the screen is the S&P, and it looks great. All the moving averages are falling, with the exception of this 50-day, which is slowly rolling over. But the important one, evidently, is the 200 week right here. Came real close to it and bounced. I know that I don't have to remind everyone again, but in case you missed it, we're in a bear market. This was a bear market rally. It was a rip your face off rally. Every single one of the stocks that I follow in mega cap were higher, save one, and everybody knows that one. And in fact, it was the only, no, I take that back. There were two Dow stocks, Apple and Procter and Gamble were down. The other 28 were all higher, and the feature was Home Depot. Not because it's cheap, not because it has solid earnings growth, because there's a hurricane. And with the price of plywood that they're going to use, and then the rebuilding on the West Coast and the middle of the state of Florida, it's a home run for them. I remember a couple of years ago that somebody came out with the most profitable Home Depot was in Puerto Rico, because they got hit by hurricanes repeatedly every season. So, Home Depot added 90 points to the Dow, roughly 18% of the entire move. Goldman Sachs, 62 points, and Boeing, 40. So, right there, you have basically 200 of the 548 that we moved up. Okay, I'm using this chart. It's not the most important chart of the day. The most important chart of the day clearly is going to be the dollar, and I'll get to that in a second. But this was a nice little test. There's a gap around 379, I think it is, on the S&P, which would be 39.80. This market looks to me like this rally could carry to 38.5 to 38.95. That would be right here, right into the resistance. The difference on this bottom versus the one that we had in June on this weekly is, first of all, the turn up was higher. Looks like the range on that day was 60 points. The range today, impressive as it was 38 points. So this had this big rally, and then for 4 weeks went sideways. That's the kind of action that we're going to need to see up in this 3900, 3850, 3900 area if we're going to test higher at this 4175 about. So, things look pretty decent. I'm sure that by now the market was up 548 or 1.8%. The Nasdaq was up 222 or 2%. S&P was up almost 2%, 71. The big winner of the day, which was up yesterday, was the Russell, up just under 54 today, 3.17, and the Dow Transports up 2.5%, a little over 300. Advanced declines on the NYSE were 6-1, 3-1 on Nasdaq. The volume left a little bit to be desired. It was 4.5 billion, and that's barely above yesterday. I think yesterday was, maybe 100 million more or less. So, but still, all in all, a pretty impressive rally. So let's take a look at what else we had today. We had the oil touching 76 and change, and then closing 82.15. That bounced right on the weekly here. Let's go back to a daily. I think that looks better. A little easier for you to see. 5-day MA flattening. Maybe it heads back here. But clearly, there's going to be some supply here at 85, just like there was resistance there before it broke. So we'll have to see how that looks. Gold closed on the absolute high of the day. By the way, nat gas also up 20 cents. Not as impressive as the oil or the heating oil or the gasoline, but still closing close to the high after coming right back down again. 200-day MA, the only one that's facing up, and that's impressive. MACD looks like it's trying to roll back to the upside. The spread here is getting smaller and smaller. We could go positive. As I said, the gold is up 33.80 at 1670 after trading 1622 this morning. And that's a really nice move here. I don't see any reason why it would need to stop until we get to about 1720. MACD here is turning down. So we'll have to see just how strong today's move was. Excuse me, silver was up 54 cents. Naturally, I was a day early. And the big chart of the day, now that the Bank of England blinked, is the dollar. Made a new high this morning at 114.74. And closed pretty much right on the low and down 1.35%. I cannot impress upon you enough how extreme these moves are. And the reason that that happened was really simple. Just take a look at what they did with the bonds today. They were down on the day, made a new low, and outside day, lower low, higher high, closing on the high. You know, this is an intervention, and interventions, they're saying they're going to be buying the long end of the market for approximately 3 weeks. That's all an intervention is. It won't work. I mean, it worked today, but it will not work in the long run. They need, just like we do, to get their fiscal spending back in order. And until that happens, bonds may be an interesting play here, especially since was interesting today. The 2-year and the 10-year, which had been apart 2-year over the 10-year by about 45 basis points, closed dead even today. The 2-year, 371 down 21 basis points. The 10-year, after being over 4 for the first time in quite a while, closed at 371, and that was 26 basis points. So while it takes the inverted yield curve out of the picture today, again, today was an intervention, and that's what interventions do. This is the 10-year. Got all the way down to a new contract low at 110 and a half about, closed at 112 and a quarter, almost 113. So an amazing move. All right, everyone. Hope everyone had a good day, and I'll be